Hey, it's Michael Saul, but everybody calls me Tiny, and this video is, did you survive the bear market of 2017? Plus, lots to say about Bitcoin. This is stock market and other market analysis for the week of December 4th, 2017. If you would like to receive intra-week updates from me, simply go to www.attackthemarkets.com, put in your first name, your best email address, click the sign me up button, then go to the email you used to sign up, look for an email from me. There's a link in there you must click in order to confirm that it was really you that put your information in, and you will start receiving intra-week updates from me. So, what am I talking about with this bear market talk? Well, a friend of mine told me that on Friday, when there was news released regarding the big testimony that's headed against President Trump by, or I should say, the alleged testimony coming from Flynn against our president. But anyway, that news sent the market spiraling. Okay, and this is a 15-minute chart of what happened on Friday. The SPY went to 265 and change, all the way down to 260 and change. Woo! And then, of course, bounced off the 15-minute 200-day moving average and came up and didn't close at green on the session, but wasn't really that bad in the end. Okay, so the last price was up here at 264.89. It closed at 264.46. And, of course, the intraday data may be different based on selling, whatever the point is. In the end, it wasn't a big deal. And the reason for the name of the video is a friend of mine told me that there was somebody that had shirts printed up that said, "I survived the bear market of 2017." Because everybody's looking for this big pullback, and it didn't happen. And if this is the worst that it's going to get, well, as we could see, it's really not that bad in the long run. Only a blip if you are a swing trader. Now, for those of you who have been following me, and if not, you just have to go back and watch the videos. They're all on YouTube. I do believe that we are going to get a pullback. I don't think we're going to have a bear market. I don't think we're going to have a huge, enormous correction, but a pullback, a smaller type correction, absolutely possible. Okay? My biggest thing, and this is what scares me, that I just look at the market now and go, wow, it just looks like we're going to just keep going up forever. And that is the talk of a nitwit. That's right, I'm calling myself a nitwit. Markets do not go up forever. They are mean reverting vehicles, the equity markets and other markets as well, which means they go back to the average, and when they get overextended, the snapback can be violent. However, that doesn't mean that I'm sitting here saying this is the spot to get short. It's extremely difficult to pick the highs in a bull market. There are a lot of former traders, former gurus, former hedge fund managers, whatever you, just pick it, who have tried to call the top of this market for years, and they just have been washed out. I mean, look at this move. It's just amazing here on the S&P. Now, I don't want to sit here and start worshiping the stock market either, but it's important to understand, and every week I always talk about this, when we get to new highs, always the time to consider taking partial profits, but more importantly, to move stop losses up, in my opinion, of course, in order to lock your gains in case there is a correction. You don't want to ride it all the way down thinking, it's going to be okay, it's going to be okay, it's going to be okay. Eventually, there will be a lower high in place, okay, meaning that we will come up, we will pull back, we will, oh, here we go again, and then we won't eclipse that high, and that will be the sign of a bigger pullback coming. Something that looks sort of like this, except an elongated scale, right? We hit a high, we come back, we put a lower high in, and then we go down, and then we mess around a little bit. This was only for a couple of days, and then we're right back up. So again, prior to this news, we had the after Thanksgiving ramp, really nice push higher here, and then this ugly candle. The question is this candle just a blip on the chart, or is it the sign of something? Is it the first crack? I do not think it's the first crack in the ice. I think we're going to go higher. However, as you have been hearing me say, I would love nothing more than a pullback here. One more pullback to get positioned for a late year move, a Santa Claus rally, although this really could have been the Santa Claus rally when you think about it, right? And I know it's like, well, wait a minute, Christmas is a little bit away. Even Hanukkah is still about a week or so away, right? But what happens is when these seasonal trends are, they start to, when people start to take notice, of these seasonal trends, they start to front run them and go in earlier and earlier and earlier. So while I don't think this is the Santa Claus rally, it could have been. I want to see a nice pause here. I'd like to see this little shot of volatility to maybe come out into a coil like this or something, and then from here move out higher once again into the end of the year. It would not surprise me if instead we got a pullback. That's why I'm not saying buy every little piece of weakness. However, I still believe we have one more move into the end of the year. Let's quickly go through, because I'm already 7 minutes in here. Dow looks similar. Here's the Russell. I mean, they all look the same, and the story's the same. Here's the Q's a little bit different, because the Q's had that nasty day on Wednesday, but did have the volatility flush and plunge on Friday. Still, I don't think there's anything to really worry about there. Here's the mid-caps. All right, let's go through the sectors. Semiconductors. Yeah, semiconductors have been in a correction since for basically the whole last week. All right, you got my Clat Tanker is getting a little sloppy. Here's NVIDIA. Yeah, NVIDIA was a darling, and it had some news, and it got sloppy. Intel, again, I don't think it's a short signal yet. It's just something to watch. It's not a clear, hey, there's another pullback, let's grab it, right? That's not really how it is right now. We got to wait, may have to wait a couple of days for something to set up. Here's the banks, right? So here's Bank of America, JP Morgan. I mean, look at these candles here that you're seeing. Here's Citigroup. All right, what about the brokers? XVD, there we go. And you got Goldman. All right, you got Morgan. You got like Mason, all showing that volatile candle on Friday. How about the biotechs? Well, the biotechs actually closed higher. We have to watch them here because they look like, right, you get a stock like a Biogen setting up in a consolidation here. Let me grab my trend tool here, and you can, and see if it, yeah. Let's see if this is a real breakout and see if it's going to start moving higher. If it does get going. And here's Gilead, another one, the pattern that I like. It did break the 200-day, but look how it got right back on top of it before trying to move out higher here. Okay, let's look at some of the big name tech. You got Amazon. Watch that 20-minute Amazon record. Cyber Monday is the biggest day ever, bigger than Prime Day, etc. Bezos keeps slathering on the wealth. Good for him. Here's Apple. Now, Apple has that lower high deal that I was talking about that we can watch for in the markets overall, right? You got the high, you got the pullback to the 20, nice buy, but it didn't quite make new highs before pulling back. Again, is it a short sign? No. Right now it's an ABC. This could be the spot where it could go blast off from, but definitely something to watch. Here's Alphabet. Watch that 50-day moving average. How about Netflix? Yeah, I mean, again, it's not a short signal, but it's mostly been in a range. Yeah, it's been leaning to the upside, but overall, and now it's back inside this price range here. How about like a Tesla? Yeah, Tesla's still struggling to get over that 200-day moving average. So maybe that's set for a fall here. But has to really get through. Let's see. Yeah, this gap at 279s, and then this gap here at 271s. Okay. Okay, let's look at Caterpillar. Yep, pop it up to a high, even with the volatile Friday. Here's John Deere. Now again, look how stretched this is. Again, it's tough to fight this strong of a move, but look how stretched it is from the moving averages. Mean reversion goes back to the key moving averages. The 20 EMA is a very popular average. A lot of people watch it. It estimates about a month, right? Because there's 20 trading days in a month. All right, so let's look at gold. Yeah, nothing. Gold has become the ugly sister for speculative investments, thanks to Bitcoin. And, of course, speculative is all relative, right? But anyway, but gold is not doing anything. It's been in a range for a couple months. Gold miners under 24, as my good friend and fantastic market technician Mike Swanson always says, people don't get interested in the miners until the GDX gets over 24. Here's bonds. Again, a lot of people looking for a bond rally. Maybe there's going to be an enormous move out of this congestion here, but it first has to break. And here's oil. So oil up here just shy of this resistance. I'm using USO, which comes in at, the high up here comes in at 12. All right, so let's talk about Bitcoin for a second. So, Bitcoin on the cover of Barrons this week. I read the article. It was a pretty nice article. If you read Barrons, you can give it a read. 100,000 new accounts open at Coinbase, I believe it's called. They say that unofficial numbers are 13 million accounts, where Charles Schwab only has, I think, 10.4 or 10.6 million stock accounts. Think about that. There is no denying that there is Bitcoin mania here. Mike Swanson wrote a wonderful piece in his newsletter about how Bitcoin is basically a stock market bubble. Okay? So while it doesn't correlate with the US dollar, it correlates incredibly with the US stock market. Why? Well, it's speculative. It's a real highly speculative instrument, speculative trading vehicle, investing vehicle. Now, the point of the article was how it's getting legitimized, right? With futures being announced, they're going to start trading, I believe, December 18th. I'm not going near them until the beginning of next year. It's so close at this point. What happens with pioneers, the people that want to be first adopters, well, pioneers end up with arrows in their back, right? So it's going to be cash settled. It's not going to be settled in Bitcoin. They are saying that the margins are going to be higher than something like the S&P futures, which is 5%. These are set to be at 35%. And of course, your broker can give you day trading margins, right? That's where the real leverage in futures can come in, although there's leverage enough. But anyway, so it's going to be settled in cash, and that could lead to some problems getting an accurate cash quote. So I think there's going to be some kinks to be worked out. Therefore, I'm going to be avoiding it for now. I'm going to be avoiding the Bitcoin futures for now. All right. As far as, okay, more mainstream financial institutions are accepting it, and, this is how it starts, and this is going to be great. And just remember, a lot of the big names were also involved in the internet bubble. Okay, if you go back, you do news searches and archives and talk about how all these IPOs are coming out with these stocks like Stamps.com and Pets.com and all these stocks that had no earnings and no chance of earnings and no business and no business model that's sustainable. There were a lot of big organizations, big institutions behind them as well. So don't let that fool you. Don't let that be the reason why you call Bitcoin and cryptocurrency in general legitimate. Okay? I believe that Bitcoin will move higher. Last I looked, and it's just about noon here on Sunday the 3rd, Bitcoin was up at 11,750 a coin or whatever it is, 11,700, whatever it is. So it's moving. I do believe it's going to go higher, but I do believe there will be a serious crash. I'm not saying this is the spot to short it or get out of the way, whatever. You want to trade it, trade it. I have not made one transaction for any cryptocurrency, not saying that I never will, but what happens with moves like this is there usually is a pretty sharp correction, aka a crash. It settles, and then it rises from the ashes, or it doesn't, right? It doesn't have to rise from the ashes. A lot of those aforementioned internet stocks never came back to their glory, right? And there's a great point in Barrons where they're comparing crypto to gold and how gold, inflation adjusted, has never eclipsed the 1980 peak, whatever it is. Read it yourself. I'm not going to spend the time reading the article to you, but so don't just think, well, crypto has to go higher. It has to go much higher. It can't crash. It can't correct. It absolutely can. And there's money being made now. There's no denying that. But the real money will be made after there is a correction, a serious correction, aka even a crash. And then what happens after that? If it does decide to rise out of the edges, and it may not be Bitcoin, right? It may be another cryptocurrency. Okay, Bitcoin may not be the star of the show forever, but whatever it is, that's when you know that the move is real. So I'm not telling you get out of all your Bitcoin if you're in it, get out of all your crypto. I'm not telling you to avoid it. Whatever, do whatever you want with your money. Okay, all I'm saying is that it's never this easy. Okay, and the fact that the mainstream is starting to adopt it, or that, oh, look at this, 100,000 accounts opened over Thanksgiving weekend, 13 million accounts, that's not, in my opinion, necessarily a good sign. Okay, and it could be the sign of euphoria, it could be the public all piling in, and we know how that usually ends. Questions, tiny@attackthemarkets.com. Sign up for my free email list and get intra-week updates. I look forward to talking to you via email or in next week's video. Have a great week.